This week on Islamic Markets Briefing, we will cover the financial results of some leading Islamic banks, IDB's annual meeting, Islamic banking assets in North Sumatra, and Indonesia's retail Sukuk offering. On Expert Talks, we will be hearing from Harris Irfan, CFO of Gateway Global and Chairman of UK Islamic FinTech Panel on Islamic digital banking race. In Bahrain, Bank ABC Islamic has reported $19.2 million in net profit for the first half of 2021, compared to $14.5 million in the same period of the previous year. Although the bank's top line continues to be adversely impacted by a lower profit rate environment and a slowdown in business activity, the net profitability showed year-on-year growth following stability in the credit portfolio and a positive macroeconomic outlook. Al Barakah Banking Group reported a total net income of $53 million in the second quarter of 2021, with an increase of 5% year-on-year. Mazin Manna, member of the board of directors and Al Barakah Banking Group CEO, said that the reported profits were buoyed by expense discipline and lower provisioning as a result of the gradually improving outlook and the environment. This has allowed the bank to increase return on equity from 8 to 8.6% in 1 year. Qatar First Bank, a Qatar-based Sharia-compliant bank authorized by the Qatar Financial Center Regulatory Authority and listed on the Qatar Stock Exchange, reported a net profit of 41 million Qatari Riyal attributed to shareholders in the first half of 2021. This half-yearly net profit is QFB's highest over the last 5 years and marks the third consecutive quarter of the net profit for shareholders. The Islamic Development Bank Group is planning to hold its annual meetings for the Board of Governors from the 3rd to the 4th of September 2021 in Tashkent, Uzbekistan, to discuss issues pertaining to the development and other institutional matters of its member countries. The meeting will focus on crucial aspects like the challenges faced by the member states in handling the pandemic and vaccination availability. Islamic banking in North Sumatra grew in double digits in the first half of 2021. Islamic banking assets, deposits and financing in North Sumatra witnessed growth of 17.54%, 17.92% and 16.02% year-on-year respectively. Farid Falatihan, Deputy Director of Sharia Banking Development at OJK, noted that for Islamic banking to realize its enormous potential, it needs to have sound capital in place to finance product innovation and accelerate the digitization of Sharia banking, thereby adding value to the community. The government of Indonesia has offered retail government securities in the form of Retail Sukuk Series SR015 on the 20th of August 2021. Sales of the SR015 Retail Sukuk series are projected to attract high interest based on the sales results of the Retail Savings Bond SBR10 series that took place in June 2021. In addition, large liquidity, limited public spending, and the resale feature of SR015 are also expected to boost interest for the sale. Financial technology, fintech in short, is defined as the use of disruptive, modern and innovative technologies such as blockchain, crowdfunding, artificial intelligence and digital currency to provide financial services. The Islamic FinTech market, which covers the financial technologies used in the Islamic finance industry, is anticipated to experience rapid growth, with transaction volumes forecast to reach $128 billion by 2025. Islamic FinTech developed through the evolvement of different verticals, starting from crowdfunding and alternative finance to blockchain, robo-advisory, and more recently, digital banks.
We are moving away from small FinTech, early stage startup companies, which are doing individual products like home financing or, certain types of wealth management services and robo-advisory, or even crowdfunding. moving towards an industry which is talking more about Islamic digital challenger banks, what's happening is you're seeing the more and more involvement of financial institutions because they have an existing suite of products and services, and they're able to see a much bigger picture. So they can see all sorts of products across the spectrum, from home financing and corporate financing and wealth management products and potentially advisory services and so on and so on. And as you see digital banks coming to the fore, it's going to be the larger financial institutions that are going to start to get more interested in that full end-to-end service. So I think we'll see an integration of existing Islamic fintech firms. We've already seen this to some extent. One or two small fintech firms have been bought out by larger firms. We'll start to see a consolidation in the industry, and we'll start to see financial institutions buying up these smaller Islamic fintechs. There is a danger with that, of course. That danger is that the culture and the purpose for which these early stage companies were set up may become diluted.
Fintech is a crowded space, but a new trend is emerging to attract the world's 1.8 billion Muslims with a Sharia-compliant alternative. This has been developing through capital flows into the growing Islamic fintech ecosystem, namely in the UK. In the last 5 years, millions of pounds have been raised by UK-based startups offering Islamic financing solutions.
I think that talent is one big reason. Talent for tech, talent for financial services, talent across the whole range of functions within a company. Clearly, a big international city like London has a lot of this, has a huge precedent for producing these kind of companies. There's a very robust environment in the UK from a regulatory point of view, from a business point of view. There's an ease of setting up companies. I mean, every year one pays, £13 to Companies House to confirm their registration. That's a trivial amount of money. You compare that with some other international financial centers, and the cost of your annual basic admin costs just for keeping a company running are pretty astronomical. So it makes a lot of sense for small tech companies who are budget constrained to set up in the UK. They've got that robust environment, legislative environment, regulatory environment, cheap cost of running a company. Almost failure is a badge of honor. I've tried to set up X number of companies and I made Y% of them work. It's not a failure to have a low conversion rate necessarily. It's actually a learning experience, and it's recognized as being a learning experience. So I think that's a really important reason why the UK is starting to see the establishment of these Islamic challenger banks. That's not to say that elsewhere in the world it's not possible. I think Malaysia's got quite a good entrepreneurial mindset. It's a pretty robust environment. I'm seeing a lot of good things happening in Malaysia as well. I think the UK has that history that elsewhere maybe is not so prevalent.
In some countries, setting up a digital bank is regulated by custom licensing regimes, whereas other countries do not employ a special license. In Malaysia, the regulatory approach when launching a digital bank, be it Islamic or conventional, requires a central bank's approval and license to operate.
I don't think there's an enormous difference between the regulatory approach that the UK has compared with many other parts of the world. I mean, I know that Malaysia is also a pretty robust environment. Islamic banks have developed in a very positive direction there. But I think there are some specific advantages that the UK enjoys versus much of the rest of the world. And that is that the regulator tends to take an approach which allows for competition, which allows for an entrepreneurial mindset to flourish. So as long as regulators are focused on, what is your flow diagram of how this service or this product works, I think that's the wrong approach. I think the right approach is, what's the product and how can we help you get this product to market? And I think that's an approach that the UK regulator has taken with fintech firms in the UK, and hence why the UK has been so attractive to fintech firms.
While Islamic banking has been relatively more successful in markets like Southeast Asia and GCC, it was less of a success in markets like the UK, where the penetration rate of the largest Islamic retail bank didn't exceed 2%. As more and more Islamic digital banks open in the UK, and by targeting younger and more tech-savvy Muslim customers, they could be more successful than the incumbent Islamic banks.
Consistently, the mistakes I see being repeated in the Islamic banking market, the traditional Islamic banking market in the UK, are three. When they hire senior managers, they're not looking at their cultural affinity with the people that they serve. They're not looking at the deep networks that they have within the Islamic banking and Islamic finance industry. And they're not looking at their technical expertise and commercial success in the Islamic finance space. One has to be part of the community to start with and understand what are the hot topics, the touch points, the things that get Muslims interested and engaged. I think if you're not part of that community, you're going to struggle with that. Be a non-bank financial intermediary. The moment one sets oneself up as a bank, B-A-N-K, one is going to be regulated and treated and have the culture of a bank. So I think what's happening in the Islamic fintech space at the moment is very interesting because we're seeing a lot of, again, early stage companies that are focused on a single product like home financing that are setting themselves up as a non-bank financial intermediary. And I think if we can amalgamate and consolidate those, we have a financial institution, which is not a bank, but which is still a financial intermediary that serves the Muslim community and can serve beyond the Muslim community. So consider, for example, alternative asset classes. Consider cryptocurrency. Particularly, as you know, I'm an advocate of Bitcoin and not other cryptocurrencies. I think that's really important for Muslims who are looking at an alternative economic model that accords with their own values and beliefs. That's why I think we should consider those alternative asset classes. Mentor the community, right? Hire those youngsters. I don't see them being hired. There's a lot of youngsters, very bright ones, milling around looking for jobs in Islamic banking, and they're not being offered them. Why is that? Be the role models to those youngsters. I don't see that happening in the traditional banking community. I don't see them as being role models to, particularly again in the UK, those communities where there are lots of youngsters of a Muslim background. They may not have polish, they may not have confidence, but there's a lot of very bright people there and they just need a bit of polishing and refining. There's a huge amount of untapped talent. And I don't think that the senior managers, the management teams of many of the traditional organizations see that. Again, because they're not part of that community.
Islamic banking has been in operation for decades, yet there is still a lot of misunderstanding of its offerings. The lack of financial literacy of the average Muslim population makes it more challenging to overcome this perception, which calls for more effort to not only increase awareness, but also for the Muslim community to educate themselves on Islamic finance.
I think that the Muslim community also needs to educate itself about financial services. I think we have low financial education in general anyway amongst the general population. In fact, I think that personal finance should be a subject that's taught at school to school children so that they may be, better managers of their own wealth in future. But the Muslim community in particular they're fully aware that riba is haram. Maybe they're not exactly sure what riba means. It's very simple. It's all excess of money on money. It's all forms of interest. So, they would immediately realize that their money in a traditional bank account, their mortgage, their business loan, all of these things are interest bearing and therefore they are riba and therefore they are haram. Now they understand the heinousness of that sin, but they feel that there's no alternative. So the industry has failed to offer an attractive enough alternative for them to be true to their values. And at the same time, the community themselves needs to get better educated on, what is halal and what is not. And I think that once members of the community become commercially successful, they become successful businessmen, there is an obligation on them to lead on the financial front. I was disappointed to note that when the prospective takeover of Asda was mooted, that there was no mention that this might be done on a Sharia compliant basis. Even if there are criticisms of Islamic financing for being a mere, duplication or replication of the conventional banking system. At least it would have demonstrated an intent to move in the correct direction. And here's a role model in the community that wants to do a large transaction on a basis which is more compatible with their values and faith and ideals in their community. Because this is also already a family that contributes to the local community in the Northwest. I mean, they build mosques and so on. They're very charitable, they're well known. This was an opportunity to tell their main banks, and these are large international banks, if you have a multi-billion-dollar transaction, I 100% guarantee you that you will be able to convince your lead bankers to do the deal on a Sharia compliant basis. Otherwise, I don't want you as a bank. It's very simple. I guarantee that they will step up and they'll say, sure, we can do this. We'll do this Sharia compliant. So they had that opportunity, and we need people in our community to step up at moments like that and say, no, I want this deal done in accordance with my values.
Thank you for watching. If you've enjoyed this video, please hit the subscribe button and click on the bell icon to get notifications on our new video. Do also follow IslamicMarkets.com on Telegram, LinkedIn and Twitter. You'll find the links in the description below.